Good morning, friends. Kunal Kalra from the Fundamental Research Team. Let us start the morning meeting. Dow was up by 1.16% yesterday, which is 407 points, whereas Nasdaq was up by 0.61%. This Thursday, U.S. consumer report is expected to offer clues about the Federal Reserve monetary policy path. It will decide if the inflation is cooling down, then we may remain in the pause for some time. But the fact target is FIs were net seller to the tune of 1900 crore yesterday. Indian markets are expected to open a little bit negative as Gift Nifty index is indicating. Now I will come off to some of the quarterly results which have been declared yesterday. One of them is Godrej Consumer Products. The FMCG company has recorded a consolidated PAT of 319 crore for the quarter Q1, which is a fall of 7.6% as compared to year on year. But this fall is more related to an exceptional loss of 82 crore, which they took because of the acquisition of Raymond Consumer Care business and other restructuring costs related to this. So if we remove this exceptional loss, there is a good growth. Revenue from operations grew by 10.4%, whereas underlying volume growth was 10%. I see that majority of the sell side broking will increase the price target for Godrej Consumer to 1200 kind of range. Torrent Pharma, the pharma company has reported a consolidated PAT of 378 crore, which was risen by 6.8% over a year ago. Good PAT, but the valuations are quite rich already for Torrent Pharma. Although the PAT is good, my observation is the action will be quite neutral because of extremely rich valuation for Torrent Pharma. Tata Chemical, the Tata Group company has registered consolidated PAT of 523 crore for the quarter, which is a fall of 12% approximately to the corresponding period last fiscal. And the reason is that the caustic soda prices have fallen. Tata Chemical dominatingly a caustic soda company. So there is a pressure on the caustic soda prices in both domestic as well as the international market. And I think this fall comparatively is lesser as compared to many falls in the profit which has come for other chemical companies. Gland Pharma, the company reported a profit of 194 crore in the first quarter, which is a fall of 15% compared to year ago period. But this is a significant rise to quarter on quarter because last quarter the PAT was 80 crore. The thing is, last quarter the share price, if you remember, also fell from 1400 to 850, and since after that the inventory restocking has happened in US market, the stock has also seen a jump. But the results are also showing a turnaround in the numbers. So I think the stock will remain on the positive trajectory because the outlook for the sector is improving, and on the there is a turnaround in the numbers for the Gland Pharma also. Railtel Corporation of India, this is a news flow rather than result. The state-owned railway company has received the work order from Pinchpin Chinchwad. The estimated annual revenue for the contract is 70 crore, and the total revenue for 10 years is 700 crore. This is a positive news for the stock. PB Fintech, the Policy Bazaar operator, has reported a loss of 12 crore for the quarter ended FY24. As compared to 204 crore loss last year, this is a very much narrowing of the loss. So we expect a positive reaction on the stock price. So another noticeable results which were there of smaller companies, SH Kelekar, there is a quarter as well as year on year beat. Jupiter Wagon, again you can note down these things, quarter on quarter and year on year beat. I will now at least summarize some of the small companies which have given noticeable year on year as well as quarter on quarter beat. Jupiter Wagon, SH Kelekar, Kaplan Point, ITD Cementation, Benco Product and Sangvi Movers. So these stocks are expected to see good positive reactions in today's market and also in coming days. 2-3 bad results, you can keep an eye. because the stocks can react negatively. Ramco Cement stock has already peaked out actually and already reacted negatively. Quite a bad result. Barbecue Nation, again a loss of 4.05 crore. Stock which was trying to bounce back may stop its rise. Gokuldas Export showing pressure on the outsourcing for textile. Results are not that great. There is a marginal decline in the result, whereas expectation was rise. Some of the neutral results are Max Healthcare, Torrent Pharma, Krishna Institute of Management Science, and Imami. So here, I don't think the stock prices will see too much of the reaction. So that's it from our side, friends. Now we will hand it over to the technical team.
A lackluster day for the indices as price movement remained confined within a narrow range post opening. Some green shoots were seen in Nifty and Fin Nifty, but Bank Nifty languished at lower levels and closed with a minor loss of 42 points. Though indices traded in a narrow range, stock-specific activity took center stage. Breadth of the broader market was positive with the advanced decline ratio of 35:14 and two stock India VIX is hovering around 11%, deciding whether to rise up to 12% or fall below 11% again. If it falls below 11%, it indicates lower chances of making sell-off like that seen last week. FIIs have been sellers in the cash segment for the fifth straight day. Since the beginning of August, FIIs have sold a net of 4,737 crores in cash, while DIIs have been providing support with a net buying of 4,210 crores in the same period. In the F&O segment, FIIs bought an index in stock futures and index options, indicating a neutral stance. Long-short ratio stands at 45% to 55%. That is 45% longs against 55% shorts. Now coming to Nifty options data, 19,500 put holds highest OI across all strikes, including calls and puts, with an OI of 207,000 contracts, indicating a shift of support with pace from 19,300 to 19,500 as far as the week goes. On the call side, highest OI stands at 19,600 call, barring the 20,000 call, which is a deep UTM call where a lot of call writers might have created short positions just for theta gain. So 19,600 call with an OI of nearly 1,60,000 contracts. So Nifty made multiple attempts to cross the hurdle of 19,600 during the day, but selling pressure emerged at higher levels each time and kept pushing Nifty down below the 19,600 mark. There was no shedding of open interest at 19,600 call, which indicates that the call writers at 19,600 strike are not willing to give up their positions and holding on to their writing bets, making it difficult for Nifty to sustain above the set level. Only if we see some unwinding at 19,600 call and fresh addition of open interest at 19,600 put, that is essentially the OI PCR of 19,600 strike, which is currently at around 0.6, has to move above 1. Only then will Nifty be able to sustain and move higher beyond 19,600 hurdle. In case if Nifty manages to surpass this hurdle, there are multiple resistance levels on the upside. The immediate resistance will be faced at 19,678, which was the gap down level that occurred last week. On the other hand, support for Nifty is firm at 19,500. So we have a narrow trading range for the coming weekly expiry of 10th August. As an actionable, intraday directional traders can sell Nifty in the area of 19,630 to 650 for a target of 19,570 and 19,530, keeping a stop loss of 19,680. Fresh buying for a new leg of rally we call for this week at a combined premium of around 45 to 50, keeping a stop loss of 77 on the combined premium. The levels mentioned are all based on spot. Moving on to Bank Nifty, on expected lines, Bank Nifty has given a pullback up to 45,000, but it was a clear underperformer yesterday compared to Nifty. Key highlight is a massive open interest addition seen at 45,000 strike, which currently holds a total OI of around 3.43 lakh contracts. Is the highest across all calls and puts together. This indicates that 45,000 mark is going to act as a stiff resistance for this week. On the puts side, highest OI is placed at 44,500 put, forming a support base. So we have a 500-point trading range of 44,500 to 45,000, within which Bank Nifty is likely to consolidate for some more time. Breach of either of these levels will set the momentum for another 300 to 400 points in the direction of the breach. As an actionable idea, a short strangle has been initiated yesterday with the selling of 45,800 call and 43,600 put. The strategy was already in profit by end of the day. We advise to hold on to the same for further premium decay by today and tomorrow. Now, besides a short strangle, a calendar spread strategy has also been initiated with the selling of 44,400 put for 10th August expiry and buying of 44,000 put for 17th August expiry as a hedge. One can refer to derivatives open calls mail for the same. Lastly, on Fin Nifty, a good show of strength with multiple smart bounce back price moves seen from 19,970 to 980 levels during the day. Fin Nifty managed to close about 20,000 by end of the day with a gain of 34 points. Highest OI for today's expiry stands at 20,200 call, followed by 20,300 call. And on the put side, 20,000 put holds the highest OI, followed by 19,800 put. We believe Fin Nifty should manage to exhibit strength even today and likely to give an expiry about 20,000. In case expiry day related notorious moves play out, one can keep the level of 19,970 on watch. Directional players can sell Fin Nifty on a breach of 19,970 for a target of 19,900 and 19,880, keeping a stop loss of 20,025. To minimize the risk, one can participate through options by buying 19,900 put as a hero or zero trade for the day. That is only on the breach of 19,970 level on spot. On the upside, if 20,080 level is crossed, Fin Nifty can give a blasting move towards 20,200 in intraday itself. In this scenario, one can participate by buying off 20,150 call as a hero or zero trade. So we have two levels, 19,970 on the downside and 20,080 on the upside. That will be trigger points for initiating hero zero trades in 19,900 put and 2150 call respectively, whichever is the case. On the stock specific action, we had suggested to buy Torrent Pharma on Friday at 2,000 for a target of 2,100. The stock has moved up to 2080 in last 2 days. One can look to book out profits in the stock and initiate longs in Biocon, which is the next likely pharma name to scale higher. Among other stocks, other sectors, stocks that we like from trading perspective and have open trades initiated by the team in option segment are SRF, Exide Industries, Reliance, and Glenmark. That's all from my side. I hand over the call for further updates. Thank you.
Thank you, Avni. Good morning, all. Jagdish side for the currency and commodity update. The dollar index as well as the US 10-year bond yields are consolidated in a range after the US Fed policymakers began to turn cautious as most officials eye the end of the tightening cycle. Yesterday, a couple of commentary was there. Fed Governor Michelle Bowman said that the additional interest rate hike will likely be needed to lower the inflation to this central bank's 2% target. While the New York Fed President John Williams said that the central bank will need to keep the restrictive stance for some time. Considering the overall structure, the dollar index is expected to trade in the range of 101.50 to 103 levels with a positive stance. Overall structure is still positive and there is a possibility of a bounce up to around 103, 103.50 level in coming couple of days. Now, USD INR opened on a downside gap yesterday and moved within the range of 7-8 paisa throughout the day. It ended the day with a loss of around 0.1%. Now, as of now, the highest open interest for the monthly expiry is still placed at 82.50 call options, and thus it indicates that 82, 80, 83 would be the very crucial hurdle on the upside. Technical structure also suggests that from last 10 months, the USD INR spot is not able to cross 83 level decisively, and it is witnessing a selling pressure from the higher levels. So overall structure is still positive, and we are not witnessing any sign of reversals as of now. But considering a very, very major hurdle around 83, one can preempt a pullback move in the USD INR, and thus to play the same, traders are advised to buy the 82.75 put option of the 29th August expiry in the range of 0.18 to 0.22 levels. Stop loss can be placed at 10 paisa, and on the upside, we can see a move up to around 40 to 50 paisa. Also, traders who are into option writing, uh, they can sell 11th August 82.25 call options and buy the 82.75 call option as a hedge, both of the 11th August expiry. Currently, the inflow is around selling pressure in the USD INR. Then this both the trades can be profitable, while in both the trades the risk is around 10 to 11 paisa, and thus traders can look to initiate the same in today's trading day. On the commodity space, gold ended the day with marginal loss. It remained in a range for fourth consecutive day. Right now, a very crucial support is placed around 59,100, while on the upside, resistance can be seen around 60,000 levels. While silver witnessed a selling pressure, it continued the negative momentum and fell by over 1.5%. As of now, the support for silver is placed around 70,200 levels, and there is a possibility of further corrective move in the silver in coming couple of days. Thus, any bounce up to around 72,000, 72,300 shall be used as a selling opportunity in silver. Crude ended the day with a marginal loss yesterday. It moved within the trading territory of Friday's trading day and thus formed an inside bar pattern on the daily scale. Overall, the MCX crude had given a breakout, but Brent is still hovering below the breakout level of 87, $88. So there is a possibility that crude oil prices may consolidate in a range, and the next range for the crude oil would be 6,600 to 6,900. So we are not expecting a very major momentum from the current levels in crude, and it is expected to remain range bound for this week. So that's it from the currency and commodity side. Now we are open for Q&A.